Hey traders, Parker here with a quick recap, real quick. I found something interesting on the news wanted to play that really speaks to what I'm trying to say about the sector market rotation indicator. I'm going to play the clip and then we'll get into the sector rotation.
Way, it's the volatility that's the issue, and it's also every third day we get that rebound, which is to say hope is still alive. And there's nothing wrong with that, but it means you never really get the cathartic sell-off. You never get the capitulatory type conclusion. And so let's take the small caps. I mean, Russell too has been in and out of the bear market, however you want to define that, 20%. It's not about that. It's that equities have been topping for quite some time. And we also have, I think this is important, a bifurcated market, and the history of bifurcated markets is not good. So think about this. We have extreme strength in certain stocks, certain areas of the market. Think about how strong energy has been, materials, steel, aluminum, precious metals, consumer staples, utilities, all up, and to the right. And the exact same time we've got extreme weakness in biotech, just gets worse, in technology, in semis, and retailers. And so when you have a spread like that, there is the thought that the strong stocks have it right, that energy is leading the way, and that the material stocks are right, and the weak ones will start to bottom. But bifurcation actually ends the opposite way. The strong start to crack. We're seeing that now. Metals and mining are cracking. Energy is cracking. A lot of the steep run-up in certain staples is starting to give way, and the weak get worse. And so we're starting to see that kind of unfolding. I think there's more downside, there's more stress ahead, and it's just a time to postpone most all new buying.
Well, I don't really like this message. This is a very difficult one.
Well, I mean, obviously, free choice. Everyone can do what they want, but I mean, there are some times where you can just maybe we do have expressions in the English like "let the dust settle," right, or just stand aside. I think that's a moment like this.
It's interesting what you say about leadership, though, because definitely people have been looking to the market and saying, okay, fine, if I stay away from, high PE tech, the overall market's held up fine. If I get into energy, if I get into some of those ports that you mentioned, maybe I can ride this out. What would your sort of, I don't want to say advice, but the way that you look at the setups here, could this dynamic be changing somewhat?
Well, so I mean, on the playbook, right? If you can call it that, on page one says obviously you go defensive. And there are people who don't have a choice, right? You are by mandate fully invested. You're running a fund. You can't hold cash, and so it's not random that Coke's doing well. It's not random that Walmart is holding up certain to extent, a large extent. So that the defensive trade is always there. But then it gets to when you do have a choice. Do you have to? And you were asking that just the prior question. Do you have to put money into Google right here? This is actually a time, I think, where you should avoid the temptation to say, I've got to get in, I've got to do something. Sometimes sitting on your hands is really the best thing.
It's different from last cycle where for that kind of 10-year period while the Fed was doing QE and the economy was quite weak, we kept getting these sell-offs, these dips that were so short, and then the rips would be so extreme that it was almost like if you didn't buy the day that stocks bottomed, and who knows at the time, you would miss the 5% move before you knew it. Why is now different?
Right, and so it depends on whether you're in a bull or bear phase, right? So if you're in a long and protracted ascent, and we've been in it depends how many years you want to measure, dips are counter trend moves in an ongoing uptrend. But see, the question now is, are we still in an uptrend? Dow theory, and this is important, right, which goes back 100 plus years, the MSA All Country Transportation Index, it peaked on May 10th. That's almost a year ago. Meaning it's never confirmed the move since then in the rest of the global equity market. Which is to say, and it's a long answer, I don't think we're in an uptrend. And so then the counter trend moves are these up moves which should be faded, and buying the dip as well.
So last question, is this a time frame that people need to wait it out? Is it contingent on what the Fed does here? What kind of gets us to the end of this downtrend?
Well, you bring up maybe the most salient point of all. It is about time. And so could it be that after the great excess of the past 2 years, it's been a very impressive move since the COVID low, whether it's government induced or not, but it's been impressive. Is this now, this stall, this churn, simply to pause the refreshes, or is it more of the stall before the storm we roll over? Let's say we don't know. Let's hold that aside. Either way, I would say 90% of the odds are captured sideways or down. That 10% only is that we somehow go higher from here.
All right, well, I really appreciate it. I mean, sort of, but I do because
Thanks for having me.
a more cosmic sense of what's going on here is helpful, especially on days like this. Carter, we appreciate it.
And that's what I've been trying to point out within the sector rotation. It's telling you all that information right there. Even the defensive sector is shrinking down. All those stocks, the utilities, healthcare, staples, real estate, and gold is going down as well. This purple, the defensive, has added those stocks together and basically divided them. And that's how you get this average. And then it has an average itself, which is a triangle line right here. And it's below us, and it's telling you defense has been downtrend. Offense is downtrend. Divergence offense is trying to come up. Those stocks that he mentioned earlier, the materials, industrials, technology, consumer staples, retail, finances, and transportation, they're trying to come up. But due to the volatility of the market, everything's going on, they're not able to make a significant up move. And you can see right here with the sector rotation 2.0, this big red histogram is the SPY. And the SPY is trying to come back up. And it mimics this bar right here. You can see how this one, this close was lower than this close right here. And that's exactly what it's showing you. It's a bigger, it's dark red, just like the MACD would be. And this blue is the consumer staple. Blue is the offensive stocks, and the purple is the defense stocks. And right now, defense is coming down, even though offense is trying to make a comeback. It's just those small up moves to those bigger down moves, and that's basically what you're seeing. And we can push it all the way back, like I have been showing over and over again, back to the whole pandemic move. Here, right here, I'll show it to you with once everything comes back up. You can see it right there. Everything is trying to come back up, but defensive, eventually everything just shut down. And you got those up moves, but then you had those huge down moves, up moves, down moves, and then eventually, after everything settled down, you had the final up move here, and everything. I know a lot of people point back to March, but really in May, everything finally recovered. Everything was above its midpoint of its 52-week high, 52-week low. And we're headed right back into this area. Everything's going back down. And that's why I call this the sector rotation model. So you can get look back in the past and see what has happened and forecast, properly give yourself enough information to make better moves going forward. And that's why I included everything that I showed you yesterday in that video. And you can see the VIX is rising. The VIX is still rising. Even though it went down a little bit yesterday, or it says VIX is VIX is still in the uptrend, and SPY is still considering the downtrend. VIX is at 31.6. It increased over its past 5 days 55%, and that just shows measures the volatility in the market. But that's it for this video. I just wanted to do that real quick because I started listening and finding out the information, and just looking for other ways to show you how this indicator and everything about it can benefit you. Thanks for listening. I wish you all the best. And one other thing I wanted to show, I wanted to put the majors on there to show you also that they're all down there. So we're going to add the major group bubbles. We're going to add the major groups. And that's the NASDAQ, the Dow, the transportation, the S&P futures, the NASDAQ, the Dow, the Russell. Those are all those, and they're at the bottom. They're all right here. So you got 1, 2, 3, 4, 5, and they're all down here. And if I'm correct, let's see, it's crossed below 50, so it's going to be gray as well. But I didn't color code those. You can go in there and you can actually make them whatever color you want to make any of those. Like the Russell is orange right now, and that'd be that other orange line that's in there. And you can go in there and make it whatever color you want to make it, and then just save it as that default, and you'll have that. But right now, that's what you're seeing. Everything's in this downtrend. It's below its 50. It's below its midpoint of its 52-week high, 52-week low. But that's it. I wish you guys the best and stay safe in the market. And like I said, I'm not a financial advisor. This is just for educational purposes and informative and for food for thought. But check it out, and I wish you all the best.